Yes, people, yes, you're back. You've got the market sniper on your hands again, and he's ranting and a raving. He's ranting and a raving because why? Because he's been warning you. He's been warning that a demand-destroying event is coming and that energies will be adversely affected, including oil. He said, including oil. Over here, you will see. Let's have a look. Let's have a look at YouTube histories. Over here, you will see a possible 40% drop, he says, with great drama and aplomb. Is it just clickbait, you wonder? Is it just clickbait? No, that is not our game. We are macro technical people. We look at big time frame charts to make major big movement calls that you can jump in once, sit in and ride and hopefully make gains. There was the 40% oil drop. We also said very clearly energy's down, gold up. We did a specific YouTube even before that on uranium equities, our primary pick, UROY, which is uranium royalties, also potentially to come under some duress potentially. This is after natural gas's head and shoulder call, which was last year, seeing it go all the way from the 10s, breaking at the 5.4s and ending up right down at the 2s. So many people have wanted to bottom call the natural gas. Should I be getting in? Should I be getting in? We're saying, wait, hold on. Demand destroying event is due. You have the chief Satan, the Fed. That's right. That private entity owned by the big banks, currently shorting all the small and regional banks. In my opinion, my little guesstimation, not a fact, a summarization, something I've concluded was probably likely to be happening on the basis that all the deposits will run as the share price falls, of course. And where do they run to? They run to those same big banks that then have extra good cash flows and balance sheet strength that make the future acquisition of those higher quality smaller banks. Yes, we touched on this yesterday in the Amazon and gold, but I want to remind you of it as we have the Fed doomsday event, the Fed statement. In that statement, the Fed did declare the US banking system is both sound and resilient. Wow! Isn't that lovely? Sound and resilient, the new, safe and effective. That's right, friends. You're listening to yours truly, having a blast, tiptoeing and dancing, tap dancing on the graves of the great deceivers, no doubt, as we chuckle our way in the land of deception, where most things that come at you are lies, damn lies, and occasionally fake statistics. Anyway, so we said to you, oil potentially could drop quite substantially. We've also said energy down, gold up. Time to have a look. And of course, we always choose these times of review. I had many a friend, let me call them friend, that popped on the oil short call trade and said, this is aging like sour milk. That was our friend Christian Torrensen from Scandinavia, somewhere. Love the Scandies. We're very well supported in our communities by the Scandies. But Christian was telling me about 30 seconds after the YouTube went up, I think it was, about how awful an idea it was. Also at that point, amazingly, production cuts happened on OPEC, and actually the oil price had gapped up. Not only gone up, it gapped up. Well, my friends, you get gaps and you get gaps, and you need to understand, people don't cut production of oil in an environment that is strengthening when they have strong underpinnings for price. Production cuts are price management, price support particularly, and that actually further emboldened us, and we held on to our existing shorts, which were at the time in the red, and we added further as time allowed, and that will see us as we refer to the charts in a minute. But hold on, you ask, energy down, gold up. Well, the relationship between the two was specifically referred to, in short, as the king of cross-valuation analysis for oil across real money, having recently just done the Amazon versus gold and silver. Go and watch that previous video. We also did the gold versus oil for you, and we highlighted the moment we said during the great collapse, that's right, in the great macro collapse that we had predicted, that you can have a look at on the link over here, that's right, at this link shared below, which talks about the original macro short call of 2020, March 2020, where you can go through multiple aspects of what went on and how it went down. And I'm going to be reverting to you and referring to, during that period, an Aramco drone strike. That's right, a stop out and re-entry. Many times on a big macro call, on a multiple winner, 1:60, 1:25, 1:19 risk reward ratios across all of them, you will not win on your very first entry. And actually, we got stopped out on our first short. I highlighted it to you. And it was only the second entries that made it home. What did they do? An Aramco drone strike. Now, Aramco, friends, was also the great listing when the Saudis suddenly became super benevolent and wanted their citizens to share in the oil wealth just before, you know what, the big collapse to $0 in the cash market. That's right, negative in the futures market. They decided, distribute to the people, distribute, have them pay us, distribute to the people, and did a listing as well. So not only did we get a listing, we also then got that bad nation Iran, you know, that had invaded Afghanistan, that has been flipping governments in Latin America, all over the world, that horrible nation of Iran that, you know, went into Vietnam and as, you know, tried to hem in the Russians and put them under pressure. That terrible nation that Israel so desperately wants you to flip the government so that we can have a central bank and have another Fed on a smaller scale that can tell you how safe and sound and resilient the banking system is and how effective their big pharma solutions for all the citizens are. That's right. That Iran supposedly did a drone strike. Well, guess what the news is today, my friends? The news today is that there's been a second tanker. Let's pivot to that news article. A second tanker stolen. High-rise piracy on the seas by that wicked nation of Iran again. That's right, seizing a second tanker in a week amid US confrontation. They want you to believe that. Kind of like the chemical weapons. Assad has been firing chemical weapons. No, actually, all evidence points to that. It had nothing to do with him. In fact, it's got made in USA on there. What is that? Well, don't ask for details. Are you calling me a liar? Well, I have a habit of doing that, I'm afraid. Iran seizes a second oil tanker. Isn't that interesting? Just as the oil price is capitulating, we have to have now oil tankers being taken away. It smells like the Aramco drone strike. Who did that one? Oh yes, that was Iran too. We had images of fires burning by Aramco that could have come from the 70s for all we know. Is anyone in the desert fact-checking that Iran flew a drone over the Saudi area and wanted to destroy their oil supplies? I think not. Iran's less worried about manipulating the global oil prices than those who are actually cutting production in an expectation of demand destruction while you are facing a Federal Reserve, my friends, that is upping interest rates into an already known goddamn recession. Long gone qualified recession. Where all the evidence is recession, yet they hang on to this notion of, but. There's a special clause that came into effect recently, the labor markets. The labor markets are so strong. Well, job openings have just had their biggest fall in ages, courtesy of the Daily Shot that does that. What do I make of oil tankers being hijacked? I don't think, Iran is doing any such thing. I think there's more to this story than you're being told, and it smells of a little bit of killing two birds with one stone. Oh, we've got to flip that Iranian government, keep them Iran bad. Time we send some Goyim blood to go fight and flip that government over in the name of Israel. That's right, our biggest benefactor of aid. Yes, we should definitely be doing that. Oh, and also a little bit of keep this thing from falling. Let's go to the chart and see how that oil has done. Here we go. Oil, here we come. This is your Western Texas Intermediate. Here's how she goes and how she blows. Supply cat gap is closed, my friend. There is your gap. That was on that. It started to roll. Obviously, the insiders got a bit of a word that they were going to do something, and that gave you a bump from here to here. It's typical of flushing out the early shorts. By the way, on our dollar index, in other words, WTI on dollar index, this did not run the right shoulder, and neither did it run this right shoulder. Despite that, as I did multiple entries, with some of which were tighter stops, some were closed, only to be put back on after the news. Why? We didn't hold on very long. This thing, turning over. Remember the bigger setup. Let's open those time frames for you as we go up. This is, of course, WTI versus the dollar. in of itself hardly a paragon of virtue, I may suggest. Despite the banking system, which is so sound and resilient. How many banks gone bust? The third, second, fourth biggest bankruptcies since you know what, Lehman's. Well, here we go, friends. That is your broadening structure. That is your blow-off head. That was your second attempt to get a new high that failed. And therein is one of many potential necklines. We have one over there. We have one over here that are all potential complex draws for the downside. And here, my friends, are the numbers that we think could be met, which could in fact see you end up with something beginning with a 3, $43.47, right down to 40.83. And if they continue with the tightening and squeezing because inflation that we of course created with our over-stimulus to the safe and effective events of March 2020 that we brought to bear, and we saw the military industrial complex take a break while the pharmaceutical industrial complex and the crisis industrial complex, the Fed is a venture capital fund for the crisis industrial complex. Hear me now. A part and big mega weapon that you're going to see more of, along with the pharmaceutical and the oil and the military. Yes, you guessed it, my friends. So demand is disappearing. Demand is disappearing. And can I say this throwdown is rather disorderly. Were you the Fed and that was the dollar, you might be talking a little hawkish in that event. Don't forget it comes after a throwdown similarly to here, off a grind line there, that saw a minor period of congestion in and around the key 75 law of round numbers after clearly spending a short spell above the 100 and trading through the 120, only for many little icebergy events. That's right. And this top, by the way, was called by us in that same case study that we've done for you on oil. My friends, understand the dollar, understand oil, and you will understand these markets. Where was that top call? He's just making wild claims. Oh, there's the Aramco IPO. Citizen bag holder stuffing was the name of the video we gave you prior to COVID-19. All the anecdotes for this event were there. You just didn't see them because you're not joining all the dots and not having the macro view, and I understand that. You've got a job and everything else to do. This is my job. This is what I love to do. This is endorsed by the charts, utilizing my secret weapon HVF method that nobody else has, that you too can learn so that you too could be making predictions just like this. Yes, you can do this too. Nothing at all special about me, despite getting lots of freakish, long-scale macro things accurately. It's actually quite an ordinary, childish human being who loves to poke fun at people sitting right here. You could do it too. You may even do it better than me. The secret weapon is, my friends, HVF method, standing for Hunt Volatility Funnel. The squeeze in the price behavior is the expansive move. It is the best trade methodology that gives you tight risks with highly expansive rewards when done correctly. And hey, you may have to enter more than once when you're looking for ridiculous R's in comparison to most people that are getting less than 1:1. That was the bag stuffing. But what about that top call? That is why we're here, isn't it? Let's get on down. Let's get on down. And of course, the subsequent bull call that went with it. There, by the way, was the fact that it went all the way to zero. Yes, you can see that chart. Once, how many times has that happened in your lifetime, my friends? You guessed it. How many people told you that that was even an eventuality of possibly happening in any part of your lifetime? Not, my friends, none. None but the man, the bespectacled man in the white gogs with the white t-shirt telling you you could have done it yourself utilizing his tool. Not only has it got very little to do with his relatively averageness, you could have done it maybe better than me. You could have made even more. So where was that top? There was the top on a broadening structure. Guess what? Just shy of the 130 mark, $130. You've got the guy that called the crash down to single digits oil, that called the subsequent major bull market on underinvestment, and the top at 130 and down, and recently warned you 1 month ago that you're probably going to see more energy destruction on a demand destroying event. Who else is calling and giving you these macro pivots in the market using technical analysis like me? Like HVF method, you can do it too. That link in the description, first below. Come and learn how to do it. Come and watch it be implemented in a community of like-minded, capable, strong-minded people that are seeking independence through building wealth in reset times, which are not like building wealth in any other time. Because all that you took for solid is a pile of sand that's going to filter between your fingers. You have to now invert the perversion that is being pushed upon you and seize the real opportunities and the few grains of truth that exist in a beach full of deception and lies. So that 130, down she came, there she broke. Minor secondary rally failed to make the new high. You had the top call, my friends, of the 129 on oil as well, all standing with the same tool and methodology brought to you by the same group of people employing it. And that is your larger macro narrative. The sell-off from here, this is a huge monthly chart, good people. Let's click on it and show it to you. The sell-off all the way from here, we were in there. And we had a stop there. We were stopped out on the Aramco spike. And then we got back in over here on the breakdown there, all the way down, my friends, to zero. You got a zero in oil. You could have been short for the bulk of that move, and you would have been net long earlier on as we continued there, the break of the wedge, and you would have known that the top was in and got out any point on that secondary rally, and you would now be biasing short. You would now be biasing short. When was this chart taken? 77. Yes, it rallied to 83.46 on WTI and is now trading in the 60s in part as part of a journey to the downside. This is the lubricant that is your overall. So as I remind you, again, the US banking system being both sound and resilient, the new, safe and effective, we are talking about the potential for oil to go down, down and down in a demand destroying event, and shorts actually is the season for us. However, in that arena, I'm expecting gold still to outperform the oil price. So let's remind you of that gold versus WTI analysis and work that we did for you over here. This was a left shoulder, that was a head, and that was a right shoulder on the only caller thereof before COVID events that were 2020, March 2020. In fact, you only came into consciousness around January, some people December. You would have already been preparing after this revisit to the downside that was mid-year of 2019. We then had the crisis on lending to each other that was being driven by, yes, you name it, the repo issues of August, September, October that were in this wee rally of gold versus silver. So what are we getting right now? You are getting a follow through after a return move. That smaller right shoulder right there, a bit like our Bitcoin right shoulder on the macro, that came after a monarch head and shoulder, the prime and king, the first of the lot that was over there. That was along here. That met its target. And that, my friends, is the reason behind the rally and why the perfect timing of the OPEC cut would have seen you get such a rally. Where did you rally to? You return move to our obvious and chosen neckline. So you had an early trigger throwback return move. During that period, we got people telling us how our call on oil aged like sour milk, etc., etc. They've gone quiet today. They've gone quiet today as this rolls over, throws down, and re-triggers that head and shoulder, as well as the earlier draw that we drew at the 0.04. This is looking precarious. This means gold to outperform oil substantially. So that doesn't mean gold doesn't have any down days. It just means in percentage terms they could be less than oil. The perfect trade could in fact be the instance where you have gold as a long potentially at a certain size and a similar size oil as a short. You could have days that both go down. You could have days where both go up, but gold will go up more on those days than oil will in general on balance of probabilities most days. And on most days, oil will go down more than gold in most days. And you will have certain days where gold goes up and oils go down. And you may have a rare day where oil goes slightly up after falling really hard, and gold has an off day. All of these events are possible, but over the long haul, like our platinum palladium call, you can be hedged, commodity hedged. The exact same trade we suggested you make over here. Most people think it was only a short call. That is the great change in this particular environment. You are doing commodity, cross-commodity trading, where you are playing long in real money when faith in a fiat system, faith in a banking system that borrows money into existence, in other words, lost faith in a debt system, lost faith in a banking system equals lost faith in a fiat system. Bad bank, bad debt, same, go hand in hand, bad fiat, anti-fiat to strengthen. What is your king of the anti-fiat markets? It's gold. It makes sense fundamentally. It makes sense when you look at where we are in the world with true understanding, and the charts show it to be so. And no one else is giving you this information right here, right now. You need to understand where we are in this world. You can come and build wealth with us in our reset times focused community for helping you secure some degree of financially purchased freedom in a Bolshevik society driven by the corporatocracy of the big banks that own the Fed and have it playing its will, are gobbling up all the small banks, telling you how sound and resilient they are, as much as the last weapon they turned on you was safe and effective. Yes, friends, this is what you're watching. Demand-destroying event, raising rates, poverty for the peasants, destruction for the middle classes, and huge wealth for those front running the asset dump and pump scheme. When to jump out of fiat, when to jump into assets, the good old control structure themselves. Right here, right now, I'm sitting with you saying this is going to be the time of your life if you prepare appropriately, or it's devastation. This is a polarizing event. If you are deers stuck in the headlights and sitting and wondering what you are going to do next and how it will all pan out for you, and you do not have an action plan, you are part of those that will be flattened by what is coming at you. However, if you understand the great game and can position appropriately for the great game, you have the potential to be one of few that will have some degree of retained wealth in the forward future coming system that is running at you like a freight train. Okay, it's the Market Sniper giving you the update on how the oil market is doing. Oh, did we show you the Dixie chart, the original? Let's go over to that and show you that before I round off. By the way, don't forget to smash the puppy licks button and give us a thumbs up, and hit always. We are being throttled because we mention the unmentionable things, because we talk rather negatively about the system and how it prevails. Give us the puppy licks, because you need to fool this algorithm and you need to help us that way, and we greatly appreciate it. And we'll commit to continuing to bring you the very best that we can. Let's have a look at that USD WTI divided by the dollar index so that you can see this cross currency. This is part and parcel of cross currency analysis, and this was actually brought and put in front of us by one of the community members who's been trained to do it, and was saying, hey guys, we need to look at this. That's right. Many people, once learning, are making active contributions. This head and shoulder is now reverting. It never ran its right shoulder over there, although it rallied very strongly, and is now reverting aggressively to the downside. I expect you will see these levels run. By the way, what are those levels? 0.38. What is the dollar index right now? Well, the dollar index is around about, I think, 101, 102. So when you multiply that out, that points to a sub 40 oil price, depending on what the dollar does relative to the euro during that period. So there's a small flex. So you can see just on a target performance, that is already seeing you in the threes. Don't forget, head and shoulders are offered secular turns and the target is not necessarily the end. If you are having a major disorderly demand destroying event, you could actually capitulate violently through that and see a substantial overrun to the downside. The opportunity is huge. Your buyers should be short, generally, in our opinion, as we go into the demand-destroying events in the select areas that we have chosen, in the select equities that we have chosen, many of which you are not seeing because they are discussed in setups in our premium community, for which you click the link below. That is in the description to book a call and decide whether you want to get serious about building wealth in reset times. Until next time, I'll catch you later. This is Francis Hunt, the Market Sniper.